Hello and welcome to Ditching Hourly. I'm Jonathan Stark. Today I am joined by guest Luke Willis. Luke, welcome back to the show.
Glad to be here, Jonathan. Thanks for having me.
Luke's our resident crypto expert. and I'm on your excellent mailing list, and you sent out a post about inflation and sound money and the invisible tax and so forth. But before we get into that, could you tell folks a little bit about who you are and what you do?
Yeah, so I am a developer by trade, and I've spent the last year and a half or so focusing on blockchain development. And so I've been building decentralized apps and writing about my experiences, writing about broader topics like inflation and money and culture and a lot of different things in a daily newsletter, which I stole the format entirely from Jonathan, and started a podcast as well, just because I wanted to talk to smart people in the space. And it's been a very edifying experience. So right now I'm focusing my time on building apps and just writing in between.
Cool. And as folks know, as you know, that this isn't really, it's not at all a crypto show, but it is very much about value and the sort of shared belief in money. And I love crypto as an example because it's such a volatile illustration of that concept.
Yeah.
Well, maybe you could summarize, if you can remember that far back, about what that email was about, and we can kind of go from there.
Sure. Yeah. And I want to comment on your point about crypto. I think it's true. Crypto gets a bad rap, but it's really useful as a tool for understanding economics, I'd say, just because it really pulls back the curtain on a lot of things that are opaque in the real world with, government fiat systems and everything that goes along with that. But when you dig into crypto, all the same forces are at play, but there's nowhere to hide.
Right.
So, yeah.
Yeah.
So, but yeah, for the post that we're talking about today, I wrote about sound money, and basically, the concept of sound money is money that doesn't lose value. It's stable, and typically the source of instability in your money is inflation. And we have examples in history of currencies that have hyperinflated and been completely worthless after just a short amount of time. But even in fairly standard, 3, 5, in the US right now, 7% inflationary periods, it's still an effect that changes your ability to rely on the money over time. And so that inflation, a lot of people just think of it as like the increase in prices, right? It's my gallon of milk used to cost me $3 and now it costs me $4. So there's inflation happening. I don't know why it's happening. All I know is that my money doesn't go as far.
Right.
And by definition, inflation is just an increase in the money supply. So take the US dollar, for example, increasing the money supply just means running the money printers, right? And so if you're a normal consumer, you have some money in your bank account, you're buying things, maybe you're selling things. You don't really see that, right? None of those printed dollars ever hit your account. So it doesn't seem real, right? It's all happening outside of you. But what's happening is basically because there's more dollars, there's more supply. So there's the supply and demand works out that when somebody goes to sell, that in the post I talked about an apple farmer, and if you're selling your crop for $1 per pound for the year, and you're hoping that that's going to get you to the next year's harvest, you're going to find that with 7% inflation, your numbers were off because you were planning on 3% inflation. And
Hmm.
so you've already sold all of your produce for the year. So now, when it comes time to pay your workers, buy fertilizer, do whatever it is you're going to do, now you have your expenses going up higher than you expected. So now you have a shortfall. So the the prices of things go up when the money supply goes up, and this forces you to now increase your prices. And so it's just kind of a vicious cycle that spins. And um like it's, you can plan around it to an extent, but when inflation is not a known entity at a rate that you can predict, it gets hard to work around inflation as a person in the economy.
Hmm.
Um, so really, like, I would love if the rate of inflation in the US was just predictable, if nothing else. I'm not asking anybody to get rid of inflation entirely, but it'd be great if I could say, for the next year, it's going to be 3%, 5%, whatever it's going to be. Just tell me how much you're going to print, and then I can plan around that.
Hmm. So let's dive into that a little bit. So I understand all this in theory, but one
Yeah.
thing that I've never understood about the printing money leading to inflation, which I first heard talked, well, I've heard talked about, but the most compelling argument, or I guess I would say proof, that I've seen of this direct correlation is an old talk by Milton Friedman, where
Hmm.
he goes through like 20 global economies, and every single time is like the government prints more money and boom, inflation goes up. But here's the
Right.
thing I have never understood is, where does it enter the economy?
Mm.
Like
Yeah.
like if the government printed $1 trillion tomorrow and then
Hmm.
burned it, like there would be no change, right? It has to
Right.
enter the economy somewhere.
Correct. Yeah.
So where does it enter the economy?
Yeah. So my understanding of that is uh, it mainly goes through banks, a lot of times through loans to, you know, whoever it is that gets loans, um, or it would be in additional investment from the banks to um, businesses. So uh, because there's an influx of dollars available, that means that more people have money to buy things. So whether that's the employees of the people of the businesses being invested in, or the people who are getting the loans to pay for home renovations or whatever, they have more dollars in their hands, so they can buy more goods. So now there's fewer goods available and there's more dollars available. So it spins from there.
That makes sense, I guess. And certainly smarter people than me believe that this is true and can point to evidence. So I'm not even argue. I wouldn't even argue that there is a direct correlation there. The I guess the next thing that I think is that I don't know who said this, but I read, and this did make sense to me, that the government wants there to always be like 2 or 3% inflation, so that the money supply doesn't remain static,
Mm, yeah.
so that it is losing value, which is going to incentivize people to not stuff it under their mattress, but to do something with it. Because I
Right.
think it would be fair to say that an important feature of a currency is that it is exchanged easily and quickly and a lot and
Hmm.
frequently, I guess. So because
Yeah.
growing up, I grew up in the 70s and inflation was really bad.
Right.
And it was just a bad thing. Like in my mind, it's like inflation bad. And
Right. Right.
because that's how it's framed. And then, so it was interesting when I heard like, oh, like a low inflation rate does kind of create an incentive to use the money that you have instead of just sitting on it, which makes sense.
Hmm.
Because if there was in a deflation, so if your money was increasing in value, not from interest, but just sitting there, and what do I mean by that? If it was increasing in value in your under your bed,
Hmm.
meaning that today I've got $100 under my bed, and that will buy me some amount of food, and then tomorrow it will buy me twice as much food, and the day after that it will buy me 3 times as much food. I'm
Right.
probably not going to want to spend it, because then
Right.
it's like, well, if I spend it now, and this is one of the things I love about crypto, is because this becomes so obvious.
Right.
I bought a pizza in 2006. If I hadn't bought the pizza, I'd be a billionaire now,
Right.
right? So I should have sat on it. So you don't want people sitting on it like hoarding money. That's
Hmm.
bad for the economy. Anyway, I just wanted to make that point that
No,
inflation is not necessarily
absolutely.
bad.
It's a really good point. Because you're right. Yeah, this is a big problem for crypto if crypto wants to be money. People sit on it because they expect it to go up in value. And, if laws were passed to make Bitcoin legal tender, it would go up in value
Hmm.
because people would be like, oh, great, now I can use it as money. And then they wouldn't use it as money. Um, so it's a problem for currencies that are sound, right? If you're highly if you're not inflationary or if you're even deflationary, um, people can just stuff it in their bank account or their wallet and never never touch it and earn value for that. You used to be able to buy 1 gallon of milk, now you can buy two just because you did nothing.
Hmm.
So in terms of like an economy and encouraging people to do things in the economy, rewarding people for doing nothing is generally not a great thing,
Hmm.
right? You want to reward people for doing things that are valuable to everyone else.
Right.
So inflation does do that, right? It encourages participation and it encourages using the money, but it also means that you don't want the money, right? Shorting the dollar is a really good bet. And to short the dollar, you take out a loan. So if you anticipate that the rate of inflation is going to be at least 3% for the next 30 years, getting a 30-year mortgage at a 3% interest rate is a great idea. So you're basically saying, I will continue to pay um, basically $0 increased value as
Right.
long as inflation matches my interest rate. And if inflation goes above my interest rate, I win. So, you know, planning
Yeah,
for
because I got the money cheaper.
exactly. Yeah, you
Right.
got the money cheaper. And the government does this to a very large extent. I mean, if you look at the national debt, it's how many trillions of dollars. It's a very interesting phenomena when you both control that debt and have the ability to print the money.
Right.
Right. Um, if you ever have the opportunity to create a currency where you can get a bank to loan you money in that currency and you can still control the printers of that money, that
Mm.
is a fantastic deal.
Yeah, and that's every like ICO,
Yeah.
right? So what's the difference? Well, we can get into the whole, secured by guns thing, but
Sure.
let's not even bother with that because the thing that I think is more interesting is I kind of, it's a crypto newsletter, right? So
Right.
maybe that's an overstatement, but um, you it felt a little bit like, I don't think you said this in the post, but it felt a little bit like the implication was that crypto solves this, but
Mm.
I don't want to put words in your mouth.
No, that's a good point. I'm actually doing a series right now to talk through the properties of money and does crypto solve this? I personally actually think the answer is crypto could solve this. There's You can build all of the features of money into cryptocurrency. But I don't think that cryptocurrency, as it stands today, Bitcoin, Ethereum, the popular ones at least,
Hmm.
I don't think they make good money.
Right.
I wouldn't want an economy that lived solely on Bitcoin, personally.
Hmm.
I know I have readers that would probably disagree with me.
Hmm.
But the there's benefit as a government to have control over the money, to have inflation, to have money that's not ultra sound, because it gives you more tools to control the economy. Now, that the whole ethos of cryptocurrency is that it can't be controlled, right? It's decentralized. Everybody has a say in what it does. It's kind of ultimate democracy because nobody can control it. It's not like you're electing a representative who gets to say. Nobody gets to say. You get to have a vote, and then your vote counts, and everybody has to agree for anything to happen,
Hmm.
which is cool. but things don't move very fast in an environment like that, right?
Yeah. It's novel.
So
It's certainly interesting.
yeah,
Uh,
yeah.
The is the premise that, well, see, the thing is, the properties of the, let's just call it the technology,
Mhm.
are super interesting, novel, new thing, public ledger, very cool. But it, like, immutable public ledger, very interesting concept.
Mhm.
But doesn't it boil down to belief, right? Like, everybody needs to believe that whatever the store value is, it could be a Amazon gift card,
Mhm.
that tomorrow someone will take it in exchange for some amount. Like, it has buying power,
Right.
right? And so right now, crypto is like, it's just, it has been all along super volatile.
Right.
So you just, like, unpredictably, roller coaster of, if you had a significant amount of your net worth in Bitcoin, you probably having a very interesting couple of years.
I'm sure.
So I feel like anything that was the thing, that was I mean, I suppose Bitcoiners would want Bitcoin to be the only, I don't know, I actually don't know this, but it would need to be something that is a lot less volatile. Because it would feel like going to the grocery store would feel like day trading.
Right. Right. Yeah. And that's the problem, right? Because of the instability of crypto, it doesn't make good money, right? You don't want to work hard one day and then go to the store the next day and find out that you have nothing. And you don't want to do the inverse either and find out you're a billionaire, right? I mean, that'd be great, but then, things go up and down, and it's no way to live a life, right?
Hmm. Hmm.
So having money that is more or less stable is really important for an economy.
Yeah.
And that is, it's interesting because there's nothing preventing crypto from having that stability. It's kind of an adoption thing. It's chicken and the egg here, where people have speculated on it. They say, oh, it's going to go up in value. So there's a lot of speculative value baked into it, but there's not a lot of people are actually using this value in it, because what can you buy with Bitcoin? Well, dollars, right? You can
Yeah.
trade it for cash. There are some stores where you can buy things with Bitcoin, but it's at the dollar rate, right? It's not priced in Bitcoin. You can't buy a Tesla for 1 Bitcoin, regardless of the price of Bitcoin,
Right.
So you're stuck with the dollar. You're still forced into that because that is the medium of exchange that we use on a day-to-day basis. It's what everything is priced in. And so, yeah, if the entire US economy said, forget the dollar, we're all going to transact in Bitcoin, we're all going to price things in Bitcoin. Yeah, I mean, that would provide the stability, because you could day over day get a gallon of milk for point whatever Bitcoins. And that would be a much more stable environment. So now we're just talking about, are the properties of cryptocurrency more desirable than the properties of fiat currency? And in certain applications, yeah, I do think that it is better. If you were to start a country with a cryptocurrency from the beginning, that would be very interesting. But I don't believe that we're going to get there in any large scale economy like the US, just because there's so much interest tied up in the dollar that it just doesn't make sense to me in any in any believable turn of events.
Right. So let's unpack this a little bit. So, like, the title of the post was Sound Money, and it seems like the implication is that the fact that the government can create inflation makes the money unsound, makes the dollar unsound.
Right.
But if inflation might be good, like, what do you, like, I mean, you have to imagine people smarter than us, or at least maybe not smarter, but with their, like, the ability to actually do something about it directly, are certainly having these kinds of conversations.
Right.
Where it's like, it's like there's probably a strong argument for people that is based on data or good assumptions or, heart in the right place type of motives that are like, if the government didn't have some kind of, shock absorber, some kind of like way to respond to unexpected events or
Hmm.
to goose the economy or whatever,
Right.
all hell would break loose. And you just be like, just throw your hands in the air, like, well, that's just the way it is, like
Right.
it would be a little bit. It's so different. I mean, like literally every person alive in the United States is used to prices going up,
Hmm.
and
Yeah.
it almost like I almost can't imagine what it would be like if they didn't. It would
Right.
be so weird, right? And then like I wonder what the effect would be because people can still choose. So like commodities would milk would always be 2 satoshis or whatever.
Right.
And okay, that's interesting, but sellers can still set prices for things,
Mm.
non-commodity things, at whatever price they want. So
Right.
like non-commodity things would still fluctuate's the wrong word, but well, no, not necessarily. Like I raise my prices. It's not because of
Right.
inflation.
Yeah.
It's because the value created is higher. So I'm going to raise my prices. Like if you're selling non-commodity goods,
Hmm.
prices would still go up.
Correct. Yeah. Yeah. We're mainly talking about commodities in terms of the impact of zero inflation.
Right.
But yeah, I did say in the post that zero inflation it sounds nice.
Hmm.
uh, but the impact I would say is not desirable for most economies. I mean, if you look at cryptocurrencies, the vast majority have some element of inflation. Um, there are like limits to how much it will inflate. There's maybe a lifetime cap or something like that. But there is inflation. And, I think Bitcoin will inflate for another 100 some odd years. And uh,
Because the
the
supply is increasing.
because the supply is increasing, yes. But then at some point the rate of inflation decreases to zero,
Mm-hmm.
and then there's no more inflation ever again. Um, so that makes it very interesting to look at. But at least in our lifetimes, we won't get to see the impact of that inflation going to zero.
Right.
So people are buying the idea that it will go to zero, the inflation rate, but that's a very long term outlook.
Mm-hmm.
So my my desire is that for governments to be upfront about inflation, because in the US, inflation it's hidden, right?
Yeah.
Like if I go looking for how much money did the US print in the year 2022, that's not like readily available. I'm sure I could find it if I dug through spreadsheets and tables and stuff, but it's not something that people talk about. People look at the consumer price index and see that the price of goods went up by X%. But if you went and you compared those numbers with the actual increase in the supply of money, there should be a very strong correlation over time. So now if you look at that, you can say what's effectively happening is inflation is a form of tax.
Exactly. Yeah. That nobody voted on. No one had to take the hit for it.
Correct. Yeah. The government can raise taxes in that regard easily without having to ask anybody. And so there's very little in the way of checks and balances to prevent printing of money. And there's very little to help consumers predict what the rate of inflation will be and how it will impact their lives. So if you're already paying 15, 30, 40% taxes, and then you're also hit with another 7% in inflationary taxes that decrease the value of your money, that that's not great.
Right.
Um,
So let me just kind of, for people who are just hearing the concept of inflation as tax for the first time, it's probably not landing.
sure.
Do you want to kind of, I mean, it's like the government at some point needs money for something, and that's
Mm-hmm.
what taxes are for. And then if they're like, well, we need more money, a politician doesn't want to say to their constituents, okay, I raised the sales tax on milk so that you used to have to pay $2 and now you have to pay 3. That's going to be a very unpopular thing.
Right.
So instead of that, someone, I don't know who, honestly, is somehow decides, well, we need that money. Nobody wants to take take it on the chin from the constituents by looking at a $2 gallon of milk that has $1 of sales tax on top of it, because
Right.
that's going to get someone voted out of office. So
Right.
somebody else says, or they all get together. I don't know who does it, honestly, and it's just like, instead of raising that money through an explicit tax, we'll just print the money that we need,
Mhm.
and the cost of milk will go up to $3, and everyone will cry about it in the media, but no
Right.
one's going to get blamed directly.
Right. Yeah.
Is that a fair description?
Yeah, I think that's a fair assessment. The 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 difference is that when you are deciding to print the money, there's no like secret room, at least as far as I know, where the top officials in government are getting together and saying, let's make it 4% and let's funnel the money here and there, right? What's happening is the different sectors of the government are spending money at a deficit. So they're spending more than the actual money that we have. So now there's debt in the government. And then a portion of those debts are paid for through inflation. So the Fed is looking at our debts, what's coming due, the need for money in different areas, and deciding to print more or less money. So all of the impacts of a budget being passed they're felt. I'm sure you can hear my cat. They're all being felt a little at a time as they come out, right? So it all flows just a little bit here, a little bit there, until eventually the printers turn on and we get more money, and then that's used to fund government spending, to pay banks, to give more loans, to do whatever it is they're going to do.
So would you say that, let's say that a wave of a sort of populist wave of people got this, like everybody gets this now, like magic wand, everybody gets this, and over the course of 5-10 years, the administration is replaced by people who get this, and it is illegal in the United States, kind of a constitutional amendment, that the current money supply is it. We're not going to print any more money. That is it. Essentially go back on the gold standard.
Yeah.
Would that, I mean, that's honestly, it sounds a little bit more likely than Bitcoin becoming like the US legal tender. I mean, they both seem wildly unlikely, but
yeah, no, I agree that's more likely, but yes, no, that won't happen. I don't expect an amendment to be passed that would set zero inflation. The incentives are such that the government really is dependent on inflation, and to get rid of it entirely is just not going to happen.
If it did, would it have the same outcome, do you think?
As what?
In other words, if inflation was, air quotes, outlawed, if printing money, if increasing the money supply was outlawed, I still think, but this could just be because it's always been this way my entire life, I still think just taxes would go up.
Yeah, I agree with that. Taxes would go up, and you'd start having people hoard money for the same reason that you pointed out, right?
Mm-hmm.
Because money gets destroyed, money gets lost, money, for any number of reasons, money exits the supply at a somewhat constant rate. And so it starts to basically become deflationary, even if you weren't intending it to be so. So especially for physical currencies, zero inflation is just not a very practical way to run things. And this is true of cryptocurrency as well. People lose their access to their wallets, and money's lost forever.
Mm-hmm.
So that's a problem that zero inflation doesn't really account for. Having mobility in the money supply so that it continues to flow is a desirable property.
Yeah, exactly.
I would rather see policy passed that forced predictability
Hmm.
on the inflation rate and just made it more transparent, right? Because in the public's mind, inflation is the price of goods going up, and it's probably due to shady businessmen.
Yeah, exactly. It gets blamed on corporations and
Exactly.
right.
Yeah. So having the government take responsibility for what inflation actually is um, would be a desirable outcome for me.
Mm. Cool. Fun conversation.
Yeah.
Love it. Love it. Yeah, I love the it's like water to fish, you know, it's like a day probably a day doesn't go by when people don't spend money. Like
Right.
everyone, right? So it's just so common, and I think all of these concepts are extreme. I mean, I barely know what I'm talking about, and I feel like it's way more than I knew a few years ago because of crypto. And
Right.
I wish more people I wish more people were, you know, like you said, if it was more transparent, if it was more obvious what was going on. I don't know if it was taught in schools or something. Like, imagine that instead of it
I
being
think I
this.
slept that day in macroeconomics.
Yeah, right. Yeah, invisible hand. It's like, is it really? I mean, it is pretty invisible,
Mm.
but you know, it's like, it feels, well, whether it's good or bad, I think, whether inflation is good or bad, I definitely agree that if it were predictable and people weren't like sitting on the edge of their seats every time the Fed, you know, makes a noise about maybe thinking about raising interest rates or something, and it's just like what good does that do anybody? I don't know.
Right.
So yeah.
I'm curious for you and for what you do, looking at value pricing things. We kind of danced around the idea of goods and services that aren't a commodity.
Right.
How do you think this changes? I mean, when you look at inflation, does it factor into your kind of work in a broader scale? I mean, when you look at just Jonathan Stark, it's maybe not as obvious, but
Hmm.
um, you know, consulting on the whole or something like that. I don't know.
Yeah. So, or just luxury goods, optional
Sure.
purchases that
Yeah.
are non-trivial. Yes, there is a noticeable hunkering down, like a sort of, you know, bear hibernate, right? Bear market, and it's noticeable when there is increased uncertainty, like the Silicon Valley Bank thing just happened, and even though
Right.
that's a small, relatively small thing, it affected a lot of people, but it's relatively small compared to what we're talking about today.
Yeah.
When there's threats of war or whatever kind of uncertainty, it increases people's decreases people's risk tolerance, and
Sure.
they think more about how they're going to spend their money, if they're going to spend their money, if now is the right time to do things. And so conservative, I would say people that are, everybody slides a little bit more conservative, except for a small percentage of the population who recognizes it as an opportunity to
Mm.
leapfrog when, you know, to zag when everyone's zigging.
Right.
So I think that is the effect, is that it sort of polarizes the risk takers from everybody else, and that's an extremely small pool of people.
Yeah. Yeah.
So if you are from a business standpoint, from a consulting standpoint, if you are not perceived as the safe choice, or the safe isn't maybe the right word, the best bet. If you are not perceived as the best bet, then you are probably not going to attract that sliver of the population that does want to leapfrog, does want to take this time to invest in their business. It's like, oh, business is slow. Instead of panicking and cutting prices or laying people off or something like that, it's like, look, yeah, it's slow because a lot of people aren't buying. If you've got the cash flow, then, or, you know, cash reserves, then it's a great time to do what nobody else is doing, which is invest in your business. So for like consulting, it was just funny. I was just having this conversation yesterday. If you're a consultant, you've got enough money in the bank to live a year maybe, and you're not getting as many sales as you were the previous year. You sort of have two options. You can do the panic thing, which is, you know, thrash your list with sales offers, or reach out in desperation to past clients, slash your prices, go down market, and instead of doing brains work, go back to doing hands work that you haven't done for a while, just because it's easier to sell, it's lower ticket, whatever. Like going backsliding basically, and you could do that, or you could take this year and write an amazing book and set yourself up for a huge next year. So it does come down to cash flow. If you don't have the money to put food on the table, like you got to do what you got to do.
Right.
But it feels like that right now. It feels like I'm noticing, because I'm in touch with enough people, hundreds of people who are all self-employed and need to be out there selling. And I'm hearing it from people like, in January in particular, there's a lot of people like, this month seems slow to anybody else, so perception becomes reality, I think, in a lot of ways with this stuff.
Right. Yeah. That's interesting. Yeah, I guess I hadn't thought about the angle of, how services react to this. I mean, granted, we've got the commodity apple farmer, right? That seems a little bit easier to wrap your head around. But yeah, even when it comes to consultants and, anybody who's doing these big ticket optional type arrangements. I mean, I used to work in big tech, and I saw with the, they'd cut back on vendors every time there was this, layoffs here. And so, yeah, if you had a big contract, that's going to be pretty tenuous.
Right. Because for companies like that, I mean, Facebook's not laying off people because they can't afford to keep them. They're laying off people. Well, this is me talking out of school, but
Sure.
In my opinion, it's not because they can't afford those people. They can't afford those salaries. It's because they want to goose their stock price. They want to be able to say to investors, "Oh, we made the hard decisions," and it's probably every quarter until things feel like they're turning around, it's going to keep happening.
Right.
Because they want to be able to say to investors, like, you were making the tough choices and yada, 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 cutting costs because they want their numbers to they want their profits to remain higher than they would otherwise.
Yeah. And I think that's a really good example of what you're talking about with this, either kind of following the market or going against it. Because, I mean, we see examples of companies that just ignore the stock price entirely and have a longer outlook than that.
Mm-hmm.
And I mean, on the whole, I'm sure it doesn't work out all the time. But those are the companies that you see that make moves against the market, right?
Mm-hmm. Yeah. Yep.
Interesting.
Yeah. If you can afford to do it, it's like, the quote, I always love the quote from Littlefinger in Game of Thrones where, Varys and Littlefinger are talking about, if some decision that they're trying to make, and Varys is like, that would be insane. It would throw the whole kingdom into chaos. And Littlefinger goes, chaos is a ladder. And, because he was like, it's an opportunity because the natural order, air quotes, it's not natural,
right.
But the air quotes natural order is upset. And so someone who's kind of low down the totem pole is going to be more attracted to chaos because they have less to lose. And so they could end up on top. So for companies that think like that and have the money to stay afloat, the reserves to stay afloat, they can do some really interesting things in theory, but easier said than done.
Yeah, I mean, this is very true in strategy games too, which are always a good example of bigger concepts, right? If you're winning, then you want to keep doing what's working. You want to control the amount of chaos. You want to limit the choices your opponent has. And if you're losing, you want to make as much chaos as possible to hopefully find an opportunity where you can flip it.
Yep.
Yeah,
exactly.
Interesting.
Good stuff. Cool.
Absolutely.
Well, Luke, always a pleasure. Where can people go to find out more about what you're doing? Maybe sign up for your list or check out your podcast?
Yeah. So both the podcast and the newsletter are at thecoinpress.com. That's the coin, KOIN press.com. And I've been writing daily there. It's been a little less than daily while I've been doing a lot of app development. But at least a couple times a week, I get a post out, and then podcast has been weekly for a while, and should be cross-posting this one there at some point. And Looking
Excellent.
forward to the next one, Jonathan.
Very good. Yeah, talk to you again soon, hopefully. All right, folks, that's it for this week. I'm Jonathan Stark, and I hope you join me again next time on Ditching Hourly. Bye.